Good evening, everyone. Welcome to our evening classes for a subject which is a very happening subject as on date. If you are into the practice, you'll find that so many issues keep on cropping up relating to the GST, and the GST Council time and again keeps on making changes, amendments, giving clarifications, making corrections in the law. So today the most happening, the most buzzing subject is GST in the business world. And for GST, ITC is one of the core concepts, one of the core areas of the subject and hence of litigation as well. Now, up till previous class, we were discussing all provisions. Now for next two lectures, that is this and the next one, we are going to deal with only the practical part, the computation of GST, computation of ITC, where ITC is available, where ITC is not available, and the manner of presenting the answers in the exams. So with this, I welcome once again everyone. So very good evening, Surinder, Maithili, Tamanna, Dhanalakshmi, Kashish, Harshal, Veerashri, every one of you, very good evening. Now before I start with the practical part, you have to first tell me if you have any queries, questions on any of the provisions that we discussed in the past many lectures. We even did in the immediate last lecture some practicals. So if you have any doubts, let me first address your queries, doubts, and then I will go to the practical aspect. So students, over to you. Anybody having any queries? You may raise your hand. You may type it. Yes, Mehak.
Good evening, sir.
Very good evening, Mehak. Please tell me, Bida.
Yes, sir. Sir, I have a doubt. In section 38, there is a telling not restricted. So there is, sir, what is the question? I haven't understood that how the question comes in exam.
See, Bida, the question, firstly, if you remember, I had mentioned that 38 has not been made effective. Do you remember this?
Yes, sir.
So
Yes, sir.
today it is only an academic provision, because to make 38 effective, you require different things to be notified in rules which have not yet been notified. So today there is no practical applicability of section 38, point number one. So I expect,
Yes, sir.
I do not have any expectation of questions on 38, but still, let us say academically, a question will be asked. The question would be like this: what are the reasons for which ITC could be restricted under section 38, right?
Yes, sir.
So in that, we will list down those 6 scenarios given in section 38, where the law provides for restricting the ITC.
Yes, sir.
Right?
Yes, sir. Thank you, sir.
Yes. Yes, students. Anybody else? Any further queries, students? Lavanya is saying, for medicine or drugs expired, then returned to manufacture through supply chain. Is it same for FMCG goods? Means the retailer, wholesaler of FMCG goods, if FMCG goods expired, they also return to manufacture through supply chain. Yes, beta, that is correct. So even for FMCG, let us say I understood you're talking about biscuits or any such items. which may have a shelf life. So see, there are two possibilities, Lavanya. First, either the contract will be such that there will be no provision for return. In that case, the person who is having the expired stock has to bear the loss. Two, if there is a contract provision for return, then what you are asking is correct. It will be through the supply chain. So in the similar fashion, how it has come to the retailer, in the same fashion, it goes back to the manufacturer. Second question is, sir, another question. He, she becomes liable to registration and he, she becomes liable to pay tax. These both are having the same meaning. Okay, good question, Beda. See, technically, yes, because only when you become liable to pay tax, either for your outward supplies or where in case of RCM, you are required to pay tax on your inward supplies, right? In those cases, since you are becoming liable to pay tax, the manner of paying tax is first taking a registration and then paying tax. However, there could be other few scenarios where you are having some transaction which is making you liable to register, but you may not be having immediate tax liability. Like you want to go to another state for participating in an exhibition from where you will be selling goods. Now you have a option, or I'll say you have a plan of selling goods through the exhibition. Now the law makes it compulsory to take registration. This is called as CTP, that is casual taxable person. You take the registration. Now it may happen that nothing is sold, so eventually there is no tax liability. So this is one such scenario where in case you are going to another state, participating in exhibition, putting your stall, the law makes it compulsory. Now here you may or may not have a liability. Similarly, another scenario, wherever you want to sell your goods through some online portal like Amazon, Flipkart, again the law makes it compulsory on you to take registration. Obviously, the objective is that through the online, whenever you will make sale, there will be liability. But today there is no liability. And it may also happen that if for 1 or 2 months, nobody has purchased anything from you online, so effectively you are not having any tax payable. So in such cases, these 2 points will become different. That is, a person who is liable to register and the person who is liable to pay tax would be different, because you are liable to register, but you may not be having any immediate tax liability. But other than this, for all other scenarios, generally it is both are complementary, that since you are becoming liable to pay tax, hence the law requires you to register. So then in that case, what you have said becomes correct. Fine, beta? Perfect. So students, now we are going to deal with some practical questions from this chapter first, because in computation of tax liability, a major part is ITC computation only. So we are going to deal with this. And after dealing with this, we will proceed to the comprehensive sums, which may come in the next class. In the meantime, if you get any questions which may be relating to this chapter or even earlier chapters, you may put it across. Now, what is the question? I know students, this is part of module. You may be having the answers. So a humble request, do not open your modules so that you will get an opportunity to apply the provisions by yourself. Plus, you'll get an opportunity to also try to recall the provisions. That is also uh, give some work to your brain, right? Hmm. So students, Now let us start. ABC registered under GST. Now see, you have to keep on checking each condition. So if you remember section 16, the first basic requirement is you should be registered. So that is satisfied. Is engaged in manufacture of heavy machinery. It has procured following items. Now the second basic eligibility condition is that the goods and services should be for the purpose of business or profession. And then you have all the conditions like there should be invoice, goods should be received, services should be received, supplier should have uploaded, etc., etc. Now, important point is where there is nothing mentioned for the other condition, like whether the supplier has uploaded or not, whether it is appearing in your 2A, 2B or not, whether the supplier has paid tax or not. If nothing is mentioned about this, you have to presume that they are satisfied, right? Now, you are given different items, 1, 2, 3, 4, and then the question is determine the amount of ITC that can be availed for the month of July, and you have to give necessary explanations that why you feel ITC is available, and if you feel it is not available, again why it is not available. Subject to information given above, assume all other conditions necessary are fulfilled. This is what I also said, that for whatever conditions they have not given any inputs, you have to assume those conditions are satisfied. Now, first is you have purchased electronic transformer, which is to be used in the manufacturing process. So one first basic condition of eligibility is fulfilled, you are registered. Now you have to check the second eligibility condition, what? Whether the goods services that you are procuring are for being used in business, and then all the other conditions requirements like invoice, receipt, etc. But if nothing is mentioned for them, it will be presumed that it is satisfied. Okay. Now for the first item, are these items used for the purpose of business? Yes, they are to be used in your manufacturing process. So they are to be used in business. Now for other conditions like invoice received, goods received, supplier uploaded, supplier paid tax, we assume it is satisfied. Now the next thing that you have to check is section 17.5, that whether this particular item has any blockage under 17.5. Now, what are the items which are blocked under 17.5? First is motor vehicle, subject to some exceptions. Then expenses on motor vehicle, again subject to same exceptions. Then vessel aircraft, again subject to similar exceptions like motor vehicle. Then in clause B of section 17.5, you have food, cosmetics, beauty products, healthcare service, and a list of items. Then you have clause C and D, which is for construction of immovable property. Then you have E, which is for purchase by NRTP, F, G, in between you have F, A, H. So many conditions are there, right? Is this falling in any of section 17.5? Answer is no. None of 17.5 covers this. So basically it is satisfying the eligibility conditions. And secondly, it is not falling in 17.5. So everything done, ITC is eligible on this 520. Right? Now coming to the second item, you have purchased trucks for transport of your raw material. Again, section 16 condition, that is it to be used in business? Yes. Business condition is satisfied. Now, all other conditions of section 16 are presumed to be satisfied because nothing is mentioned. Most important is 17.5. Now in 17.5, the very first clause A covers motor vehicle, and motor vehicle includes trucks. So now the question is whether ITC is allowed on trucks or not allowed on trucks. Because if you remember, I discussed the conditions twice. Firstly, in the first lecture, then again repeated in detail in the next class also, that when motor vehicles ITC will be allowed, right? So considering the pointers which I discussed, what is your understanding whether ITC of trucks which will be used for transporting the raw material required in your business, whether it will be allowed? You can say Y for yes, you can say N for no. Acha, most important, here you are not in the business of goods transport. That is not given. You are in the business of manufacturing of machines. So you are not going to use this truck for running your business of goods transport where you are doing transportation for others. That is not the scenario. You are doing transportation of your own requirement goods. So Y for eligible, N for not eligible. Acha, if you are giving me some reason, that should be great. Like Kashish, what is your reason for saying not allowed? So Maithili, okay, I'll put another question to you, Maithili. Let me first conclude this. Okay, so Vedant is saying no, and Vedant has given me a reason. Gayatri, give me a reason. Vedant has given me a reason why he believes ITC is not available. Gayatri, Kashish, what is your reason why ITC is not available? Dhanalakshmi, trucks are coming in motor vehicle definition. Let me inform you that. Okay, Kashish. See, if you remember, students, my exceptions which I had given. Exceptions means where ITC is allowed, because basically 17.5, as I said, is a negatively drafted provision where it says ITC is not allowed. And in that, the first item on which ITC is not allowed is trucks. But having said that, I had also mentioned that it has further given that ITC is allowed in some cases which are exceptions to the main provision. And in that, if you remember, goods transport vehicle ITC is always allowed, irrespective of whether you are in the business of goods transport, irrespective of whether you are in the business of purchase sale of trucks. That makes no difference. For goods transport vehicle, ITC is always allowed. So I'll just open the provisions also parallelly for you, because I think you all have forgotten the provisions. See, this is the list of those cases where ITC is always allowed. And in this, the last case which I had written, it's goods transport vehicle, and I had even given example tempo trucks, lorry, etc. So in these cases, ITC is always available. So where you are purchasing goods transport vehicle like trucks, even though you are not in the business of transport of goods, even though you are not in the business of sale of trucks, ITC is always allowed because goods transport vehicle is exception to 17.5 blocking. Since it is exception to 17.5 blocking, ITC is always allowed. I hope students this is clear to all, right? Okay, okay. Now I'll just add one more item here, though not given, but just to understand or increase our understanding of the topic. Let us say in this list, fifth point, that you have purchased Mahindra SUV for travel of directors for business meetings, and the amount of ITC is given. Let us say rupees 80,000. So you have purchased a Mahindra SUV car which will be used for travel of directors whenever they are going for business meetings, whether ITC is allowed or not. You have to say Y or N. Okay. Pawan says no. Harshal says yes. Sushmita, Kashish, Dhanlakshmi. Pawan says no. Karan says yes. Pooja says yes. Tamanna says no. Nikun says no. Amit is yes. Dhanlakshmi, you are correct. So then what is the answer? Harshal, you are saying yes. Yes, I mentioned that you are saying yes. Okay. Maithili says allowed. Abhijit says no. Good, Gayatri. Vedant, it is section 17 bracket 5, not 75. It is section 17 bracket 5. That is section 17 subsection 5. Right? Okay. See, students, now this is where the difference is between a passenger vehicle and a goods vehicle. What is the difference? When you are talking about a passenger vehicle, like Mahindra SUV is a passenger vehicle that is for travel of human beings, right? That is what is a passenger vehicle. In that case, the rule is, as you can see on the screen, ITC will be allowed if you are in the business of sale of the vehicle, which is not our case. You are a business of transport of passengers for tourism, etc., which is not our case. You are running a motor driving training school, which is not our case. And last is where you are not fitting in any of these three types of businesses, then your motor vehicle should have a capacity of 13 plus passenger, which is again not our case. Now, since for motor vehicle, which is a passenger motor vehicle, these four are the only scenarios where ITC will be allowed, and our scenario is not falling in one of these four. Hence, ITC in my example will not be allowed. So here it is allowed, but here it is not allowed. I hope it is clear. Whoever feel that it is allowed, please check your understanding. Please check it in relation to what I've just mentioned and let me know if you still have a question, because this is one of the most common examples adjustments that you will get in a ITC question. Is this clear, students? I hope you understood what I'm trying to say. Good, very good. So the answer for my extended scenario is that ITC will not be available. Now you have purchased raw material. Raw material is satisfying the first eligibility requirement, that it is for being used in business. And then there is no blocking under 17.5. So ITC is available. Then there is a business meeting. So it is used in business only, na? Okay, confectionery items. Now, why you are purchasing confectionery items? So it may include chocolates, it may include biscuits, etc. Because whenever some customer will visit, or whenever there will be some customer meet organized, just you will serve the customer these items as a business gesture, that if somebody is coming to your place, you offer them something to eat. So that is why these confectionery items are purchased. Whether ITC is allowed or it is not allowed, whether it is available or it is not available. Yes, students, allowed, not allowed. Yes, Sridhar, you should prefer writing the section. And how you will remember the section, I always mention that you repeat the section number every time when you are reading, when you are solving, automatically it will get thorough. Yes, you have to mention the section and how I'm explaining why it is allowed or not allowed, you have to mention that. So answer is as correctly given by all of you all. It is not allowed. But Dhanlakshmi, your reasoning is incorrect. It is for business. Because see, when any customer is coming to my office, to my factory, I serve some food articles, which may be biscuits, cookies, or some sweet something. This is directly related to business because it is part of your business practice to serve your customers. So the justification which you have given is not fitting. Though your answer is correct, but justification is wrong. So you will not get marks. The reason is it is specifically blocked in section 17, subsection 5, clause B, which restricts ITC on food articles. So confectionery is a food article. So since it is a food article, ITC is blocked, right? There is only one exception where ITC is allowed for food articles. Rather, there are two exceptions. First one is where you are in the same line of business, that is, you are also selling food articles like restaurant, etc. Then ITC is allowed. Second, where you have to give this to employee, and giving to employee like canteen, running canteen for employee is your statutory duty put by some law. Only in these two scenarios, the expenses on food and beverages will be allowed. Otherwise, it is blocked, right? Now, in our case, there is no such scenario. Hence, it is blocked. ITC is not allowed. Is this clear to all students? To see how I'm discussing with you all, this is exactly the manner in which you will write the answer. Please remember, you can explain in your own words. There is no problem. Don't worry that you have to use technical language only, law language only, not required. You can simply say that confectionery items to be given to customers is part of business. So section 16 basic eligibility is satisfied. However, it is expressly blocked in section 17, subsection 5, clause B. And the only exception where it can be allowed is not present, like one, where it is to be given to employees like a canteen, where it is the statutory obligation. This is not the case. Two, where you are in the same line of business where you are also supplying food articles like a restaurant or a caterer, which is also not the case. Hence, it is blocked in 17(5)(b). And that is why ITC is not allowed. Is this clear? So let us move on to the next scenario. Now, in next scenario, again, we have different pointers. For each pointer, you have to determine whether ITC is available or not, and you have to also identify your reason. So, chalo, I give you 2 minutes, or let us say 5 minutes. I know there are answers, but please do not refer. Let your own understanding decide the answer. Chalo. Go through the question, go through each of the pointers, develop your own reasoning understanding, because you have to answer with reasoning and also with section numbers. Now see what is given. So the question is like this: XYZ registered under GST. So first eligibility condition of being a registered person is satisfied. It is engaged in manufacture of taxable goods. Compute ITC that can be availed in the month of October from the following particulars. First, it is input A. So it is also satisfying your second requirement that it should be used for business because it is given it is input. Now, total GST amount is 1 lakh. Now, some additional information is given. What it says, one invoice which has GST of 10,000 is missing. Now, when you go to the conditions, the very first condition under section 16(2), clause A, the very first condition is that ITC will be allowed only where you have a proper tax paying document for that transaction. Now, the tax paying document would include invoice. In case of import, it will include bill of entry. In case of RCM transaction, it would include self-invoice, etc. Now, if this document itself is missing for whatever reason, then until and unless you get this document, ITC will not be allowed. So in order to get the benefit of ITC, you should have the document, the basic document for the purpose of ITC availability. Correct? So in this case, your ITC will be allowed, but excluding this first 10,000 amount. So the answer is ITC available as per the requirements of section 16 is 90,000, and this 10,000 amount ITC at least for the time being is not available because of the specific requirement which is not fulfilled, that is under section 16(2)(a). Right? Clear to all? Now the next condition or the next item, input B, total GST component is 50,000. These are to be received in 2 lots. First lot is received in October. Now see, we have to determine the ITC available for the month of October. Now, The point is, in this particular case, the entire raw material was being dispatched to you in two lots, out of which one lot, that is one truck, it has reached you in October. The second truck has not yet reached. Maybe it will come somewhere in November, December, whenever. Now, in this particular case, the question is, can I take part ITC? So let us say, just for understanding, my first truck covers half of this inputs. So half inputs are in first truck, half inputs are in second truck. Whether I am eligible to claim ITC of the half of this particular item. So I have answers. Okay. Good. Answer is, as you all are rightly mentioning, there is no provision for allowing part ITC in this. Now, what is the specific provision for this? The provision is section 16, subsection 2, proviso, where in the proviso they have said that wherever the goods are received in lots, so you have to say proviso. It is not only 16.2, it is 16.2 proviso. So as per 16.2 proviso, wherever goods are received in multiple trucks, that is in different lots, you are either eligible to take full ITC or no ITC. There is no provision of taking proportionate or part ITC in this particular case. So I will not be eligible to take any credit, not even of that truck of which I have received. So that much proportionate is also not allowed. Is this fine? Now coming to the next item, capital goods. Now, capital goods also ITC is allowed. Yes, it is used for business, so that basic condition is satisfied. Total GST component is 120. Now, what is given? XYZ has capitalized the capital goods at full invoice value, including the GST portion. So, let us say, for example, the capital goods is of 10 lakhs. The GST at the rate of 12% is 120. So in your books, you have capitalized 1120. That is, you have capitalized the GST portion as well. Now, the question is, will you be eligible to avail this ITC? Veerashri says yes. Harshal, Kashish, Dhanalakshmi, Gayatri, Surinder, Karan, Lohit, Vaishnavi, all these are saying no. Maithili says no. Mac also says no. Sridhar has given me the reasoning with section number. So correct. So students, you all are correct except two of you. So the ITC is not available for this particular item because the rule given in section 16 subsection 3 is that whenever capital goods are purchased, the GST component, like in this example, I just elongated the example saying that capital goods machine is of 10 lakhs and the GST on that is 1,20,000. This 1,20,000, which is the GST component, is eligible as ITC only if you have not capitalized this along with the value of asset. Now, they have specifically mentioned that while capitalizing, you have capitalized the entire 11,20,000. That is, this 120 is also capitalized. Now, where you have capitalized the GST component, the rule is you are not eligible to take ITC because now you will be taking depreciation of that 120. So the law says that ITC will not be allowed for this 120. correct? So in order to take this ITC, you should have only capitalized 10 lakhs and not this 120. If you would have capitalized only 10 lakhs and not this 120, I would have allowed you ITC. But since you have capitalized the entire amount, including 120, the ITC of this 120 is not allowed. Now, next item is input services, on which the GST component is 225. Now, what it says, one invoice which is dated 20th January, on which GST was 50,000, was missing and has been found in October. Okay. Now, what it is saying, subject to information given above, assume that all other conditions are satisfied and the annual return is filed on 15th September. Now, see, this is pertaining to January. It means it is pertaining to previous financial year. So let me give you proper dates. Have they given the year? No. So let us say we are talking about January 2025. So this input service is of January 2025. Now in January 2025, the invoice was missing. Now, as we saw in the first point, if the invoice is missing, you cannot take ITC. However, you found this invoice later, which is October 2025. Now, the question is, this ITC is for financial year 24-25. What is the last date for availing the ITC of financial year 24-25? So for this, you have section 16.4. What 16.4 says? The last date to avail ITC of any financial year is up to 30th November of the next financial year or date of filing annual return, whichever is earlier. Now, we have filed the annual return on 15 September. Again, I'll add the year 25. Now, if you have filed the annual return 15 September 25, so what was the maximum time up to which you could avail this ITC? 30th November 25 or 15 September 25, whichever is earlier. So obviously it is 15 September 25. So the last date for availing financial year 24-25 ITC in this example is 15 September 25. Now you are doing it in October 25. Is ITC allowed? Answer is no. So out of this, 175 is allowed. This 50,000 is not allowed. I hope this is clear to you all. Maithili, I hope better now it is clear to you. Last date in this example is 15 September. Beta, what you did not understand? Harshal, beta, this 50,000 is gone. Already you are claiming in the next financial year. In the next financial year, you should have claimed before 30th November or the date of filing annual return, which is 15 September, whichever is earlier. So it is 15 September. So you should have claimed it up to 15 September. You are claiming it after 15 September. When? In October. So if the last date for claiming ITC is gone, later on, it cannot be claimed anytime. Maithili. So what was your last date to claim this ITC? In my example, 15 September 25. When are you claiming it? In October 25. So it is after the last date. So how I'll give you the ITC? Vedant, beta, you are already availing in the next financial year. I've already said this ITC is of 24-25. So you are availing it in the next financial year. That is October 25. But there is a timeline in the next financial year up to 30th November of that next financial year or filing of annual return, whichever is earlier. Now, in this example, my annual return is filed on 15 September 25. So you should have claimed this ITC in this next financial year. 25 is the next financial year by 15th of September, which you have not done. So your ITC is permanently gone. Is this clear, Harshal? ITC is permanently lost. Is this clear, Vedant? Right? Should I proceed? Hope it is clear to you, Vedant. Good. Chalo. Wow. Now this will require some effort. So what is given? XT Private Limited, supplier of goods, is under the regular scheme. What is the other scheme? It is a composition scheme, and in composition scheme, anyways, ITC is not allowed. So, anyways, composition scheme cannot come here. ITC is anyways not allowed to them. So you are under the regular scheme. We have made the following outward supplies. So now firstly, the details of outward supplies are given. Intrastate on which you will charge C plus S. Interstate on which you will charge I. Now these are the values of supplies, not of GST. It has also furnished following information in respect of purchases made by it in that tax period. So what are your purchases? Again, intrastate on which you would have paid C plus S, and here you would have paid I. Now again, these are values of your purchases, not of GST, correct? GST we have to compute. Now, you also have opening balances in your ITC ledger. So CGST is this, SGST is nil, IGST is this. Now, what are the rates? The rates are CNS is 99 and IGST is 18. Both inward, outward supplies are exclusive of taxes. That is, the amount given is before tax. And you have to assume all conditions necessary is available, is satisfied. Now you have to compute the minimum GST payable in cash. This is what you remember in the previous class also I had mentioned that when you are doing that set off, you have to go by that option which will give you the minimum payment by cash ledger. That will be the correct answer. Correct? So now let me take you to the answering. Now before we go to that table which we use for setting off, we have to make some calculations. So first is calculation of output tax liability. Now you have intrastate supply and you have interstate supply. So IGST, CGST, SGST. Now how much is your intrastate supply? Intrastate supply is 8 lakhs. 8 lakhs into 9% will be C also and S also, correct? So it is 8 lakhs into 9%. So how much it will be? 72,000. 72,000. How much is your interstate supply? Interstate supply is 3 lakhs into 18%. So it is 3 lakhs into 18%. Correct? So IGST liability is 54,000. Now similarly, computation of ITC available for set off. Now, how much ITC is available for set off? ICS. It will be opening balance plus current ITC. What are the figures? Opening balance is IGST 70, CGST is 57. Please write it in correct column, students, otherwise there will be a problem. Then current ITC. Now current ITC again on intrastate supply and interstate supply. Now how much is your intrastate? Intrastate, you have made a purchase of 2 lakhs, again 9% each. So it is 2 lakhs. Sorry. It is 18,000. Correct. And your interstate purchase is 50,000 into 18%. So it will be 9,000. So what is the total ITC you have, students, for set of 79? Here 57 plus 18, 75, and this is 18. Please cross confirm if these calculations are correct. Right? Now I'll do the main part, computation of GST payable. Now this was our format, if you remember: output tax, I, C, S, and then ITC. I, C. Now, how much are your liabilities? Liability is 54, 72, 72. So it is 54, 72, 72, right? How much is your balance? 79, 75, 18. 79, 75, 18. Now, what is the rule? You have to compulsorily first utilize the ITC of IGST, and that also against IGST. So I'll first utilize 54,000 here. Now, after adjusting 54,000 IGST against IGST, I still have the credit left of IGST. How much IGST credit is left? The credit left of IGST is 25,000. Now, what is the rule? You can utilize from both. You can utilize from any one. It is your choice. Now, what I explained in the previous class, if you remember, I'll first see my other balance which I am having. What is my other balance? I'm having CGST, which is sufficient to knock off CGST liability. But my SGST is less, so I will not be able to knock off the SGST liability completely from SGST. So since my SGST is less, SGST credit, I will utilize IGST credit for SGST liability. So I will use this balance 25,000 here. Right? So my balance is nil. And I will use nothing here, though I am eligible, but I will not use anything. Correct? I hope this is clear. Here also I am eligible, but I will not use anything. This 75 will be used here. 72. Correct? $3,000 is the balance. Then this will be my payment from cash ledger. Here it is nil. Here it is nil. and here it is 29, right? Is it clear, students, to you all? Should I proceed? Anybody having any questions, doubts? This is the answer. The GST payable is in SGST. You have to pay 29,000. Correct? Chalo. Now let us go to test your knowledge questions. Sridhar is saying, sir, in below table this day, sir, in below this table it is written statement. That is cash paying to GST payable 29. I did not get your point, Sridhar. No, Harshal. The problem is you cannot do that because you have to compulsorily use IGST credit firstly for IGST liability. And after satisfying the entire IGST liability, then only you can use it for others. Fine. Which note, beta? Harshal, you are right, but then first requirement is that what the law is saying, you'll have to compulsorily follow that. Na? You cannot go beyond the law, Harshal. Either which note you are saying, I'm not getting your point. Beta. Which note? So, beta, you have to write it in what I've done is what you have to write it in exams. This is how you have to present in exams. First, show computation of output liability, computation of ITC, and then the knockoff and the payment through cash ledger.
सर हमने आंसर कैलकुलेट करने के बाद वो नीचे वैसे ही इस क्वेश्चन में 29,000 कैश पेबल करना है.
लिखा है ना मैंने यहाँ पे पेमेंट फ्रॉम कैश लेजर.
हाँ तो फिर से वो स्टेटमेंट में लिखने की जरूरत रहेगी कि नहीं रहेगी सर? वो
कौन सा स्टेटमेंट बेटा? ये स्टेटमेंट ही है ना, और कौन सा स्टेटमेंट आप बता रहे हो?
मीन सेंटेंस में
नॉट नेसेसरी बेटा.
ओके सर.
Okay. Shall let us proceed. So there are some straightforward theory questions. What is input tax? So it is the tax which is paid at the time of procurements of inputs, input service or capital goods which are to be used for the purpose of business. And it will include all GST taxes, that is CGST, SGST, IGST, UTGST, and it may be paid under forward charge or under reverse charge or on import. All these things will make up your input tax credit. Correct? So this is how you can write answer for this. What are the conditions? So here you have to mention all 16 conditions. So first, you should be registered. Second, the goods service should be for the purpose of business. Then invoice should, a proper taxman document should be received. Goods services should be received. Supplier should have uploaded and it should appear in your 2A, 2B. And then it should not be restricted by section 38. Then tax should have been paid by the supplier. You should have filed the returns. Then in case of goods received in lots, ITC will be allowed only when the last lot is received. Next, in case where it is a bill to ship to transaction, even where the goods are received by third party or the services are received by third party on the instruction of buyer, it will be deemed that the buyer has received. In case of capital goods, you should have not capitalize the GST portion. And then the last is 16.4 condition, which says that you can take ITC maximum up to next financial year's 30th November or the actual date of filing your annual return, whichever is earlier. Next, can a person take ITC without payment of consideration? Students, what is the answer for this? Can you take ITC if you have not made the payment of consideration? Yes, Maithili. Okay, Kashish. No, Vedant. But see, the perfect answer is that today you can avail the ITC. There is no challenge in availing the ITC today. But you should have made the payment for this invoice within 180 days. If you do not make the payment of this consideration within 180 days, then you will have to reverse it after 180 days. However, this restriction of 180 days will not apply if this supply is under reverse charge or where it is a deemed supply under Schedule 1. In that case, anyways, there is no question of consideration. And third, where it is a part of valuation under Section 15(2)(b). So firstly, the answer is ITC is allowed now, that is in the month of purchase, assuming all other conditions are satisfied. Even if the payment is not made, ITC is allowed. First point. Second point, however, this ITC will become your final or permanent ITC if the consideration is paid within 180 days from the date of invoice. If it is not paid in 180 days, then you will have to reverse it and re-avail it in future whenever you make the payment of the consideration. If you make part payment of consideration, ITC can be availed partly. Now, thereafter, the next point is that you need not reverse the ITC even after 180 days in three situations. First, where this supplies under RCM. Second, where it is a deemed supply. So in that case, there is no question of consideration itself in the first place, so no question of payment. Third, where you have taken the value as per 15(2)(b) valuation. Right? So this is how you will answer this in detail. Next, what is the time limit for taking ITC? So say students, what is the section for this? Time limit for taking ITC, section number. Okay, Karan has given me one answer. Good. Good, Maithili. Good, Sridhar. What else? Okay, Amit. Yes, Dhanlakshmi. Good. Harshal, your answer is incomplete. Good. Correct, Dhanlakshmi. So the answer is, as per section 16, subsection 4, the maximum time limit for availing ITC is after the end of the financial year to which this invoice pertains, Firstly, you can avail it anytime during that financial year. After the end of the financial year to which this invoice pertains, you can avail it in the next financial year up to earliest of the two dates. What are the two dates? One, 30th November of the next financial year, or whenever you file your annual return. Out of both these dates, whichever is earlier, that is the time limit for availing the ITC. If you do not avail the ITC by this date, whichever is the earlier date, the ITC will be permanently lost. Correct? Yes. Good. Now you all are well versed with the provisions, and I'm happy that you are also well versed with the section numbers. That's good. Now, this question. What is the ITC entitlement of a newly registered person? Now, this is interesting. Now, I'll say, sir, this is pertaining to what? The students try to recall. We studied special provisions under Section 18. What does Section 18 says? That when you are getting registered, either under compulsory registration or under voluntary registration, then from that date onwards, after getting registered, whatever invoices you are receiving for inward supplies, you can take ITC, no problem. But the date when you get registered, on that date, whatever is your stock balance of inputs only, not of capital goods, only of inputs, and that input is up to last 1 year, you can avail ITC of those which are lying in stock on the date on which you get newly registered. This is what is the condition under Section 18. So this will be the main part of the answer in this question number 5. Okay. But Maithili, it is not relating to that point. Here you are newly registered. That Section 38 restriction, it is good that you linked it, but it is not applicable here because 38 restriction is where your supplier has taken, means your supplier is a newly registered supplier. In that case, 38 will restrict it. But as I said, 38 is not made effective because they have not yet provided the minimum time. That is, that person is newly registered. So newly up to what period? 1 month, 3 months, 6 months. That is not yet provided. Hence, 38 is not effective. But the point is, here 38 itself is not applicable because I am newly registered. So I can immediately take ITC. I have no restriction of 38. But where I make a purchase from a supplier who is newly registered, then it may get restricted under 38. That also in future when 38 is made effective. Harshal Beta, what did you say? I did not get your point. So Beta Sridhar, you're right. So they have given you some time limit for doing this procedure of taking the ITC, and you're right, that is 30 days. So within 30 days, you have to do the stocks computation, find out the ITC, and fill the form on the portal for getting this ITC. Yes, for that you are given 30 days. Correct. Correct. Now, what is the tax implication of supply of capital goods by a registered person who has taken ITC on such capital goods? So you have to read it like this. What will happen if you sell the capital goods? So what is the implication of selling the capital goods? Now, while purchasing capital goods, if you had taken the ITC, now in future, whenever you will sell this capital goods, again Section 18 will trigger 6. What does the Section 18.6 says? In that case, you will have to pay an amount which is higher of two amounts. One, proportionate ITC, and second, tax on the sale value of this capital goods. So you have sold the capital goods for some price, find out the tax, that is the GST on that. This is one amount. Second, whatever is your total ITC minus 5% per quarter of use. So whatever period you have used it, you have to take 5% per quarter. Subtract this from the total ITC. So this balance figure is your first amount, which is the proportion ITC. Second amount is compute GST on the sale value. Out of both these amounts, whichever is higher is what you have to pay. This is what is the provision in case of supply of capital goods. Yes, Harshal. Yes, Dhanlakshmi. Correct, Harshal. Is this clear to you all students? This provision, right? Next is question 7. A registered person transfers its business to another. Now, this is again a special case covered in section 18. Transfer of business. If such registered person allowed to transfer unutilized ITC lying in the electronic credit ledger to such transferred business. Students, what is your answer? Are you allowed? So if you are selling your business to another person, are you allowed to transfer the ITC? What are the conditions? Correct. But then what are the conditions? Is there any condition? Very good, Maithili. You're right. So what are the conditions, students, for transferring the ITC? Correct, Dhanlakshmi. So the condition is that when you are transferring the business, you should transfer all assets and mainly all liabilities. If you have not transferred all liabilities, then you cannot transfer the ITC balance. So this is the first requirement. Second requirement, again here a time limit is given that within 30 days you should transfer it and you should fill the form on the portal, that is ITC 02 form. Right? Now come back to previous question 6. Vedant is asking, sir, explain this 5%. So I'll explain, Vedant. So how is this proportionate ITC to be computed? So let us say you have purchased the capital asset in July for rupees 50 lakhs and GST at the rate of 18% is rupees 9 lakhs. Now this is July 2024. Now you are selling this asset in May 26 for rupees 20 lakhs. Correct? So let us understand this. Now you have to find two amounts and take whichever is higher. So this amount is simple. It is 20 lakhs into 18%. So it will be 3,60,000. So sale value multiplied by the GST rate. But what is this proportionate ITC? So for this, what they say, count the number of quarters for which this capital asset was used by you. Now from July 24 to May 26, how many quarters are there? So you have used the asset for 1 year, 10 months, right? Now 1 year, 10 months means how many quarters? So one full year is 4 quarters. Then further 9 months is further 3 quarters. So it means total you have used the asset for complete how many quarters? So it is 4 plus 3. So it is how many complete quarters? 7. So it is 7 quarters and 1 month. So 1 year, 10 months is equal to 7 quarters and 1 month. Now, the rule says even fraction of a quarter, like 1 month is not a complete quarter, it is a fraction of a quarter, has to be considered as complete quarter. So 7 complete quarters and 1 month. This is the period for which the asset is used. You will consider it as 8 quarters. Now, how is this proportion amount to be calculated? It is ITC, which you had availed. What is the ITC you had availed? You had availed 9 lakhs minus 9 lakhs into 5% per quarter. And how many quarters you have to take? 8 quarters into 5%. So 8 5s are 40. So you have to take 40% of 9 lakhs. Correct? So 7 quarters, 1 month will be taken as 8 quarters because even fraction of the quarter will be taken as complete quarter. 5% per quarter. So 5% multiplied by 8. So it becomes 40%. 40% of 9 lakhs. How much it will be? 3.6. And that has to be subtracted from 9 lakhs. So ultimately the amount left here is 5 lakhs 40,000. So this is my amount of proportionate ITC. This is my amount of sale value on the asset. I have to take whichever is higher. So it will come to 5 lakhs 40,000. Vedant, I hope this is clear to you. Students, I hope this working is clear to all. Everyone has understood this point. Yes. Vedant, you will not avail. You have already availed ITC of 9 lakhs. Now you'll have to reverse ITC of 5.4 lakhs. Because the higher of the two amounts is 5.4. So now you'll be paying 5.4 lakhs. No, beta. Here you have to do calculation quarter-wise only, Harshal. It cannot be done year-wise. So where the law requires quarter-wise, you'll do calculation quarter-wise. Right? Students, is this clear? Anybody, any further queries or doubts? Yes. Okay. Let us proceed. Now the next question is Swastik is a manufacturer of taxable goods. It purchased a machinery for rupees 8 lakhs. GST is 1440. The company has claimed depreciation under Income Tax Act on full value of machine, including the GST component. And it has also availed ITC of this 14,400. Now what you will have to do? Now the law says one of the things can be done. Either you can capitalize it and avail ITC. Sorry, you can capitalize and avail depreciation, or you can take ITC. Both are not allowed. Now, since you have already capitalized it, hence as per section 18 subsection 3, you will have to reverse the ITC taken. So since you have already capitalized it, now ITC should not have been taken, but you have also taken the ITC. So now what you have to do under the law, you have to reverse this ITC. I hope this is clear to you. You have to reverse this ITC. Correct, students? Harshal, what did you say? No? You have to reverse the ITC. Yes, correct. Okay, fine. ठीक है. Now, the next point is a taxable person is in the business of information technology. So you are, let us say, a software provider company, or you develop apps, etc. Now, what it says, he buys a car, seating capacity is 5, which will be used for the directors of the company for their travel, for going to meetings, etc. Whether ITC is allowed on such car purchase. You have to give me the answer with reason. Students, give me the answer with reasons. I do not only want yes or no. I want the reasons. I'm getting varied answers. See, so firstly, you have to see whether it is a passenger vehicle or a goods vehicle. If it is goods vehicle, no question at all. ITC is always allowed, right? But since it is a passenger vehicle, now you have to check whether the person is in the business of sale of that vehicle. No. Is the person in the business of uh, tourism, transport, and using the vehicle for that? No. Is the person in the business of using the vehicle in running motor driving school? Answer is no. Now, if none of these business are done, then the next requirement is the person going to purchase this car with a seating capacity of 13 plus passengers? If yes, then only ITC is allowed. So only in these 4 cases ITC is allowed. If not, ITC will not be allowed. So Anil, it is not allowed. Maithili, section 18 is incorrect. You have to apply section 17 bracket 5 clause A. Sridhar beta, your reasoning is incorrect because car which is used for travel of director, CEO is very much used for business. Karan, what you have written? So students, please do not only see the 5 seating capacity. You have to check whether you are in the business of purchase sale of motor car. 2, whether you are in the business of traveling, tourism, transportation. 3, whether you are in the business of providing motor driving training. When these 3 businesses are not there, then comes the next point. When you are not in any of these businesses, then the next point to be checked is whether this particular motor car is of 13 plus seating capacity or not. Correct? If you are directly only answering from 13 seating capacity, then it may get wrong in some other case. So you have to first see the 4 businesses or the 3 businesses, and you have to mention that in your answer, and then you have to go to the 4th condition of 13. So the answer is ITC is not allowed because you are not in the first 3 business, and 4th, the car is not having 13 plus seating capacity. In this particular scenario, please be clear, students, that your asset, that is a car, is being used in the business. It is very much used in the business, because some of you said that it is not used in business, hence it is not allowed. That is incorrect, because it will use it. It is used in business, or it will be used in business as per the given conditions. Because when you are using it for travel of your directors, for travel of your CEO, it is very much for business purpose. It is not. It is not correct to say that it is not for business purpose. So the answer is ITC will not be allowed. But how you have to answer, I have explained. Is this fine? Next. Next point is, the technical testing agency tests and certifies each batch of a machine tool before dispatch by BMT Limited. Some of these tools are dispatched to a unit in a SEZ for authorized operations without payment of GST, as these supplies are not taxable. The finance personnel wants to know whether they need to carry out reversal of ITC. So now what is the point? You are making some tools, and these tools you have dispatched to a SEZ unit. Now, since it is dispatched to SEZ unit, you have done it without payment of GST. Now the question is whether ITC reversal is required for these units which you have given to SEZ, which is without payment of tax. Yes, students, your answers. Students, answers. But where it is written non-payment of tax? Acha, you mean to say that on output tax is not paid? Okay, so give me the section if you are saying that. Okay, Dhanlakshmi, what is your reason? Maithili, but they are not paying tax, no? So Dhanlakshmi, within 17, what is the subsection? Because subsection is important. In 17, there are multiple subsections with multiple reasons for not allowing ITC. Student, this is a different type of question, so I want your involvement in this. No, Pawan, 16.2 is incorrect. Here 16.2 conditions have not been breached. So 16.2 is not the correct section. Very good, Sridhar. Now, as per the section which you have just mentioned, whether I need to reverse the ITC or I can claim the ITC. So Sridhar, you have given me the perfect section number. But now for that, you have to also give me the answer. Anil, which reason section? Okay. So now you are getting the correct section number. Then Lakshmi, Kambira, Sridhar, you all are giving me the correct section number. But then, what is your final answer? Now you have given me correct section number. Give me the answer. Whether ITC is required to be reversed or not. So students, let me inform you it is section 17, subsection 2. So this section, this one. Now because of this section, their finance person is saying you need to reverse. So what is your answer? Whether you have to reverse or you don't have to reverse. Students, Harshal, I did not get your answer, beta. So whether you are asking me or you are giving me an answer. Very good, Vedant. Very good, Gayatri. So students, I'll read 17.2 again. What does 17.2 says? Where goods or services or both are used by the registered person, partly for taxable supplies and partly for exempt supplies, then the credit will be restricted. That is, it will be available only to the extent it is for taxable supplies. So where you are using it for taxable, credit is allowed. When you are using it for exempt, credit is not allowed. Now here, when you are supplying to SEZ, it is without payment of tax. Now the question is whether supply to SEZ is exempt supply or it is a taxable supply. So just read what they have given. When ITC will be allowed? When it is used for making taxable supply, including zero rated supplies. So where you are using the ITC either for making taxable or for zero rated supply, in both cases ITC will be allowed. Now what is the definition of zero rated supply? See, so firstly, where you are making a taxable supply or a zero rated supply, in both cases ITC is allowed. Now what is a zero rated supply? So one, it includes exports. Second, it covers supplies for authorized operations to SEZ developer or SEZ unit. Now in our case, since we are making supply to SEZ and it is for authorized operations, it falls in the definition of zero rated supply. So our supply is a zero rated supply, and since it is zero rated supply, hence GST is not charged on it. And then when you read 17.2, 17.2 says that I will allow ITC 1 where your supply is a taxable supply, and 2, even if it is not a taxable supply, it should be a zero rated supply. So ITC will be allowed in both cases for taxable supplies or for zero rated supplies. Now, since supply to SEZ is a zero rated supply, ITC will be allowed. So I will explain or give answer to this section in the same manner. I will first refer to 17.2. I will say that as per 17.2, ITC has to be reversed to the extent the goods or services or both are used for exempt supplies, and ITC will be allowed to the extent the goods or services are used for taxable supplies or for zero rated supplies. So first part of my answer will be this. Now I will go to the definition of zero rated supply, and I'll say, as per the definition of zero rated supply, it includes one, export outside India, two, it includes supplies for authorized operations to SEZ unit or SEZ developer. Then I will give my concluding answer. Okay, since in the given case, the supplies are made to SEZ for authorized operations, obviously it is without payment because it is a zero rated supply. Hence, as per 17.2, reversal is not required because 17.2 covers ITC eligibility for both taxable supplies as well as for zero rated supplies. Since here our supply is a zero rated supply as per the definition of zero rated supply, hence ITC will be fully allowed. I hope this is clear to all. So our final answer will be we need not reverse the ITC. Fine, students. I hope this is very much clear to everyone. Everybody, no doubts on this, right? Perfect. Great. So then let's have a break of 10 minutes. We'll come back and we'll proceed further with the other questions that we have. Fine, students. So let's have a break of 10 minutes. Yes, correct, Harshal. Let us continue. Now next, AB is a registered person and AB is paying tax under composition scheme up to 30th of July. With effect from 31st July, AB is getting converted to regular scheme. Is AB eligible for ITC? Students, is AB eligible for ITC? Good, Dhanalakshmi. Yes, others. Okay. Very good, students. Very good, Amit. ठीक है, great. So now see, we'll read it from where, because now you all have understood this. So it is as per section 18, subsection 1, clause C. What it says, where a registered person ceases to pay tax under section 10. This is the technical way of saying that a composition dealer is converting to regular scheme. So see, now we'll try to understand it in the technical language also. So it says that a registered person ceases to pay tax under section 10. Section 10 is the composition section, and you are now not covered in section 10. So it means you are shifting to regular scheme. Now it says you are entitled to take credit of the input tax in respect of inputs held in stock, semi-finished goods, finished goods, and most important, even on capital goods on the day immediately preceding the date from which he becomes liable to pay tax under section 9. Section 9 is the regular scheme. Now it means in our example it will be 30th of July. So since from 31st of July he is converting to regular, so whatever is his stock on the immediately preceding date, which is 30th of July in our example, he will be eligible to avail the ITC of all this stock. And for capital goods, it is specifically said, shall be reduced by such percentage points as may be prescribed. Now, students, whenever the word as may be prescribed is given, you have to go to rules. Now, what does this point says? Now, this is rule 40, sub rule 1. The input tax credit claim in accordance with provisions of 18(1) on the inputs held in stock or in semi-finished goods or in finished goods, or the credit claimed on capital goods in accordance with provision C, which is our case, that is composition to regular, shall be subject to following conditions. Now, what are the conditions? First, input tax on capital goods in terms of clause C shall be claimed after reducing the tax paid on such capital goods by 5 percentage points per quarter or part thereof. Now, in my just recent example, which I had taken in the previous question, where it was 7 quarters and 1 month, we had taken 8 quarters. Why? Because they are saying either completed quarters or even part of the quarter will be taken as full quarter. And this you have to count from the date of invoice on which the capital goods were received. So you have to reduce your ITC of capital goods by the 5 percentage per quarter. Now we already know this calculation. I have done it in the previous sum. Then what is the second condition? the registered person shall within 30 days from the date of becoming eligible to avail the ITC, that is the date of conversion in our case, will have to make a declaration, and the form for this declaration is ITC 01. So within 30 days you have to make a declaration so that you are eligible to claim the ITC. However, extension of time may be granted. Next, the declaration under clause B. Now we are not clause B, so this is not relevant to us. Again, clause B is not relevant to us. This is relevant to us. The input claimed in accordance with provisions of clause C shall be verified by corresponding details furnished by the supplier in form GSTR 1 and form GSTR 1A if any, or as the case may be in form GSTR 4 on the common portal. So what is the rule 40 saying? That you will be allowed to take the ITC provided you follow this procedure. And most important, you can take ITC of inputs which are held in stock as inputs, or which are part of your semi-finished goods or part of your finished goods which is held in stock, and also of capital goods. But for capital goods, you have to reduce it by 5%. So this is how the ITC would be eligible in this particular case, where you convert from composition to regular scheme. And for this purpose, you have to take the stock of inputs and capital goods as on 30th of July. I hope this is clear to everyone. Next question. Bla Enterprise is engaged in making exempt supplies and thus not registered under GST. Now on 1st October, the exemption available to the goods is withdrawn. On that date, the turnover is 45 lakhs. Examine the eligibility of Babla Enterprise for availing ITC. So now, here we are in another scenario. You are converting from exempt to taxable. So if exemption is withdrawn, it means now your goods are becoming taxable. So students, what will be the answer? Whether ITC is available, whether ITC is eligible. Chalo, tell me the answer. Only 4 answers, students. What about others? If you are saying yes, yes on what? Because some students are saying no because the person is unregistered. If you are saying yes, yes on what? Because Lohit says it is not eligible. Maithili says not eligible. Sridhar also says not eligible. But Harshal Gayatri says eligible. Yes, Karan. So you are getting registered. That is the point. You will get registered after the exemption is withdrawn. Now the point is not, or the challenge is not about whether you will be registered or not. The question is, what about ITC? Karan, eligible, but for what? Because others are saying since you are fully exempt, you are not eligible. Now, if you say you are eligible, how come eligible? Okay, Dhanlakshmi. Anything else? See, students, I think you forgot this point that when a person is converting from exempt to taxable, again, Section 18 has a specific provision. Now, my main question is you are falling under Section 18 or not? Question 1. And if you are falling under 18, say question 2, then under which provision? Because 18 has 4 different cases or 3 different cases. So my first question, are you falling in Section 18? Only one answer. What about others? Students, you have to be active because if I directly give you answer, it will not help. Only when you are involving, then whatever we will discuss will be more helpful to you. You will be able to retain it more. So my first question is, are you eligible? So now many of you are saying yes. Now in section 18, what are the different scenarios covered? So the different scenarios covered are unregistered to registered, then composition to regular, and then exempt to taxable. Now, what is the difference? For these two cases, you are allowed to take ITC of inputs plus capital goods. But for this case, you are allowed to take ITC of inputs, but not of capital goods. So the point is you are falling in which category? This category or this category? That is what is the main question here. So first answer, you fall in section 18, yes. But within 18, which one? Unregistered to registered category, because there you will be allowed on inputs only, not of capital goods. Or you are in the category of exempt to taxable, in which case you will be allowed of inputs plus capital goods. Mithili, I have still not answered. So what is understood by you? I'm still on my question. So first question, 18 applicable, yes. Second question, within 18, which category? Unregistered to registered or exempt to taxable? Because both have different answers for ITCA eligibility. Students, the answer is, it is the first category, that is unregistered to registered. Now you'll say, sir, but his case is exempt to taxable. You're right, but there is one small difference. When we are talking about this case of exempt to taxable, see, I will show you. So in section 18, again in subsection 1, you have clause A, clause B. Both these are for unregistered to registered. The difference is one is compulsory registration, one is voluntary registration. And then you have this D. D is for what? When a person whose supplies were exempt now becomes taxable. But I'm saying you are not fitting in this case. Why? Because this case is applicable when you are already registered. So you are already registered and the supply which you are making is exempt. Then you convert to taxable. But what is important? You are already registered. Now, if you are already registered and you convert from exempt to taxable, you fall in clause D. And what is the difference if you fall in clause D? Inputs and capital goods both are allowed. But if you are putting in clause A, that is where you apply for registration within 30 days of becoming liable for registration, that is compulsory registration, then you are allowed to take credit of inputs. But here you will not find the word capital goods. This is what is my main point of focus in this particular question. So I'm saying you are covered in 18.1a and not 18.1d because a very big difference is you are allowed in 18.1d ITC of capital goods also, obviously after reducing that 5%. But here in this case, since you are unregistered and now after becoming taxable, you will also take registration. Hence, you are not fitting in 18.1d, you are fitting in 18.1a. And because of this, you will be allowed ITC only of inputs in stock, not of capital goods in stock. I hope this is clear to everyone. Students, because this is the most key point of this question. Because majority times, as a student, we only remember exempt to taxable. So we answer it, but we answer it as per 18.1d. And if you answer it as per 18.1d, it will be wrong. Right? Clear, students? Should I proceed? So you are eligible for ITC. Stock inputs under section 18.1a, not 18.1d. This is my point. Correct, students? Understood by all? See, beta, registration provision requires that the date on which you become liable to register, you have to apply within 30 days. So if you apply within 30 days, you get registration from the date on which you are liable. If you apply after 30 days, you will get registration from the date on which the number is allotted. So there is maybe a gap of 40, 50 days. So that is what is the point of 30 days beta. Then Lakshmi. Right? Clear? Great. So this was an important or tricky question. Next, Mamta TradeLink trades in exempted goods and also provides taxable service. Now see, here you will understand the difference. It is already registered under GST. So you are dealing in two things. One is exempt, one is taxable, and hence because you have one taxable item also, you are already registered. Now what has happened? On 1st October, the exemption which was on the goods is withdrawn. So now your goods also become taxable. Now in this case, analyze the scenario and determine the eligibility of Mamta for availing ITC if any on inputs and capital goods used in the supply of exempt goods. Now here you will be eligible for ITC on stock of inputs plus capital goods as per section 18(1)(d). See the difference between the two. Yes, students, I hope it is clear to all now with both these questions. But I input Dhanlakshmi. What is your question? Why input tax not available? In fact, we are talking about input tax only, na? Dhanlakshmi, I'm not getting your question. What you are asking? We are talking about input tax only. So what is your question or doubt? I'm not getting. Dhanlakshmi, I'm waiting for you, beta. So, beta, in this case, when you are getting registered compulsorily, on the date when you take registration, you are allowed to take ITC of the stock which you are having as on that date, but that is allowed only of input stock, not of capital goods stock. So when you are unregistered and now you are taking a registration, the date on which you are allowed the registration, on that date, whatever is the stock of inputs, you take the ITC. Understood? So, beta, see, ITC is allowed for exempted goods only, because for taxable goods you are anyways taking ITC. Na? So whatever was your stock relating to the exempt items, you had not taken ITC prior to that. Now the date when you are taking a registration, whatever is the stock of those inputs which you will be using now since it has become taxable, now you'll be paying tax on that. Now I think what you are getting confused is that if my goods are exempt, I have not paid GST, what is the question of ITC? Please understand, your output was exempt, your input was not exempt. So input, which is the raw material, is tax paid raw material. You had purchased the input by paying tax, but you are using it in output which was exempt. So you are not taking the ITC of the tax which you had paid on inputs because your output was exempt. Now when your output becomes taxable, whatever tax you had paid on inputs earlier, which is lying in your stock, that ITC which you have paid on purchase of those inputs, which is now lying in stock, now becomes eligible. Is this clear? Great. Perfect. Now, a very interesting question. What it says. Harshdeep Private Limited, a registered supplier, is engaged in the manufacture of taxable goods. The company provides following information: purchases made, services availed by it in the month of July. So you're already registered. So first criteria fulfilled. Now, first is raw materials. These are to be received. It means they are not yet received. They will be received in September. So whether ITC is allowed or not allowed on this, students? Whether ITC is allowed or not allowed on this. Very good. Very good. Why? Because the condition of 16(2)(b) is not met. What is 16(2)(b)? Goods or service should have been received. So you have to quote the section number And you have to explain saying that section 16(2)(b) requires that in order that ITC is allowed, the goods or services should have been received. Now, since you have not received the goods or services, hence ITC will not be allowed. Next, membership of club availed for employees working in the factory. Now for this, you have section 17(5)(b). Now what does 17(5)(b) says? That wherever you are taking membership, it will be eligible only if taking the membership is obligatory. Now, since it is not obligatory, again here ITC will not be allowed. I hope this is clear to all. I hope this point is understood. Good. Very good. Good. Now next, inputs which are to be received in 5 lots. Third lot was received. It means fourth and fifth are not yet received. So the answer is so as per proviso to section 16, this credit will not be allowed since fourth and fifth lots are yet to be received. You will get the credit only after you receive all the lots. Correct? Then truck is used for transport of raw material. I hope you understand. 17(5)(a) is the relevant provision, but it is allowed because the condition or the restriction in 17(5)(a) is having the exception for goods transport vehicle. So wherever goods transport vehicles are purchased, ITC will always be allowed. Right? Next, capital goods. Out of 3 items, invoice of 2 items is missing and GST paid on those 2 items is 80,000. So correct. Answer is $70,000 allowed, 80,000 not allowed. Section 16(2)(a). Right, students? Correct? Yes, perfect. Next. Again, jump to registered person. Engage in business of spices. It provides following details in relation to GST paid on inward supplies. And the month is October. Now, first condition. Raw material purchased. First, sold to customer. Second, use for personal use of directors. What will be the answer, students? Okay. Section for allowed and not allowed. You all are correct, but section number. So yes, this is allowed. This is not allowed, and the basic condition of section 16(1) itself is not satisfied, that it is not used in the course of business. Correct. Next, electric machinery purchased for being used in manufacturing process. Allowed? Not allowed. Good. So since this is a capital asset used for the purpose of business, all conditions satisfied, no restriction under 17.5. So this ITC is allowed. Now, 6-seater motor vehicle used for transportation of employees. What is the answer for this? Maithili, what is the reason for your answer? Maithili, what is the reason for your answer, beta? So, if it is used for employee transportation, then so beta, whether 17.5 blocking is not applicable. Correct. So, Veerashri, you are right, but there is nothing mentioned about this, na? And it is for purchase of motor vehicle, na? It is not allowed because it is blocked by 17.5A. Firstly, it is a passenger vehicle. Now, it is a passenger vehicle, then you have to check what the 3 businesses. Are you going to sell the vehicle? Are you in the business of purchase sale? No. Are you in the business of traveling, tourism, transportation of passengers? No. Are you in the business of providing training of motor driving? No. These 3 are out of question. You're not in these 3 businesses. Then still it will be allowed if the vehicle is of 13 plus passenger capacity, which is also not your case. So all the 4 situations in which ITC is allowed, you are fitting in none of these situations. So beta, it is used in business, I agree. But for motor vehicle, for passengers, there is a specific blocking under 17.5A. And only 4 exceptions are given where ITC will be allowed, that is blocking will not be available or applicable. You are not fitting in any of those 4. Correct, na? Maithili? Fine. Good. Now, payment is made to contractor for construction of staff quarters. It is used in business, yes, no doubt. Section 16 conditions are satisfied, no doubt. Allowed or not allowed? Very good, Dhanlakshmi. See, construction, the moment you hear this word, what should come to your mind? Section 17.5 C and D. Here it will be C because you are hiring a contractor. If you would have yourself purchased the cement, steel, and appointed labor, it would have been 17.5 D. But since you have hired a contractor, it is 17.5 C. Now, what is the rule under 17.5 C and D? So, if you are doing construction, if it is of movable, ITC is allowed. If it is of immovable, then you have to check, are you going to capitalize it or is it a revenue expense? If it is revenue expense, ITC is still allowed. If you are going to capitalize it, is it a plant and machinery? Then ITC is allowed. But if it is not plant and machinery, ITC is not allowed. So here we will have to write an answer, but a conditional answer, that whether this 125 or whether this particular asset, that is construction of staff quarters, is capitalized or not. Now, generally, if you go by the accounting principle, it is a capital asset. So you have to take an assumption that it is capitalized. Since it is capitalized and it is not expense on plant and machinery, hence the ITC on this particular construction cost is not allowed as per 17(5)(c). I hope, students, this is clear to everyone. Has everybody understood this point? The point on construction expenses payment made to contractor. Yes, students, everybody, this is clear? Super. Next, Dina, registered supplier for Maharashtra, is engaged in manufacture of passenger autos. Company is providing following details. Purchase of iron, which is used as raw material. Goods were received in 2 lots, first in March, second in April. Now you have to do it for March. ITC allowed or not allowed? Yes. So in March, it is not allowed. Correct. Because the condition of section 16(2)(b) not satisfied. Next, purchase of accessories which were delivered directly to your dealers. So it has not been received by you. It is delivered to your dealers, but you had given the direction. You only received invoice, but the goods were not received by you. Whether ITC will be allowed? Very good. Yes, Dhanalakshmi. Perfect. So, as per explanation to section 16(2)(b), this is bill to ship to transaction. And for bill to ship to transaction, where the goods are delivered to a third person on my direction, ITC will be allowed, because it will be deemed that when the goods are received by that third person, I have received it. So ITC will be allowed. Next, purchase of a bus which is having seating capacity of 15 for transportation of employee. Whether ITC allowed or not allowed? Yes, so now it is allowed because it is of more than 13 plus capacity. Hence, it is allowed. 17(5)(a) exception. Next, general insurance taken on car. Seating capacity is 5. And the car is used in business because it will be used by the directors and other officials of the business. Whether the general insurance is allowed? Perfect, because the car is of less than 13 plus capacity, hence not allowed. Correct. So students, I hope you all have understood this. We stop over here. Remaining sums we cover in the next class, because next class is also on practicals. So in the next class, we will continue our practical discussion. I hope by now you would have got a better understanding and a greater control on the provisions of this particular chapter. So keep studying. Please refer to more variety of questions to sharpen your knowledge, your understanding of the topic. This will help you understand thoroughly the concept, and it will ensure that you get full marks in your exams. So with this note, let us conclude today's session. Thank you, students. Thank you very much. Okay, Gayatri, I'll check it, and if not there, I'll upload it. Fine. Thank you, students. Thank you very much. Thank you all. Good day. Yes.